Hi, everyone. Today, let's quickly talk about Google's AI event. Then we'll go over Disney earnings. Then we'll look at the charts. And then we'll take a look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Alphabet had their AI day, and the stock fell 7% after the event. You can see they announced their Bard AI, and basically it didn't go very well with investors. They said the company is planning to roll out the technology in the coming weeks, which is interesting. That's pretty quick. It's an artificial intelligence chatbot, very similar to ChatGPT, the one that everybody's been talking about. It's based on their large language model, Lambda, and that they plan on opening the conversation technology to trusted testers ahead of making it publicly available. It demonstrated some of its capabilities, like displaying the pros and cons of buying an electric car, for example, or planning a trip to Northern California. This event took place one day after the Microsoft event, where they talked about their AI platform and how it's going to be integrated with Bing and how they plan to improve their search business and start competing with Google Search. Microsoft is going to use the maker of ChatGPT, in which they have invested billions of dollars, in order to supplement their own AI build, which does give them a pretty good head start here. Google, however, does have a good AI business, and obviously they have Google Search, which is one of the biggest and most profitable technologies in the tech space, and that's part of why Microsoft is going after it. Overall, analysts understand that Microsoft is going to have a hard time pulling people away from Google Search, but that they could potentially do it over time. And they mentioned that the Google AI that they've been working on for quite a long time, at least in this presentation, does seem a little bit rushed. And I think part of the thing that investors are looking at is that it doesn't point out a clear path to profitability, whereas Microsoft is pointing at using their AI for taking customers away from Google Search. Google AI doesn't seem to be looking at making money right now quite yet. Moving over to Disney, they beat on expectations, actually did pretty well. They didn't lose as many subscribers as was thought, and they did recently raise prices, which is expected to lead to 2.4 million Disney subscribers falling off during the quarter. Overall, the stock is up 3%. Bob Iger is back in the seat, making significant changes, and he seems to be the guy that can turn Disney around. They made 99 cents versus the 78 cents expected. Revenue, $23.51 billion, beating the $23.37 billion expectation. Total subscribers at 161 million, which is a huge number. So even if they do lose a few million here from their price hikes, it should still overall be profitable for them to do so. They did lose $1 billion on their Disney Plus service, narrower than the $1.2 billion expected, and they made $6 billion in revenue from their parks, which continues to improve from the pandemic. Moving over to the charts, starting with the S&P 500 on the hour and the 4-hour, you can see they're both in bearish momentum. Does look very bearish here. After the move down today, this does look like a lower high here yesterday. We were waiting to see if we were going to kind of bounce from here and create another uptrend, but it didn't work out that way. So we now have a low. Does kind of look like a higher low here today, especially if we do rally a little bit into the open. I wouldn't expect to get above the previous high here. Maybe 414 would be the high that I would look for. I would expect to find resistance there and potentially get pushed through. We are still above this trend line, which is interesting. We didn't get below the 50 line on the 4-hour chart quite yet, but we are getting the cross of the EMAs here on the hourly chart once again into bearish territory. Overall, to me, this does look bearish. I think we're just kind of coming into a little bit of resistance here with a top and a slightly lower high here, finding some resistance at the end of day. Maybe we make a slightly lower high, and then we get that bigger push through the support level. And then if that does happen, there's obviously going to be a couple of levels in here, but you would be looking for a test of this lower support line sitting all the way down at about 396.50 or so. Moving over to the NASDAQ on the 4-hour and the daily charts. Similarly here, we did get the cross on the 4-hour chart. Momentum is bearish here. We did find some support again at the Monday low and the low from yesterday, so we're still holding at that 304 level. Did test it once again here today, but like I said on the SPY, I do think this is going to roll over. It does look like we might come up and test maybe 307, maybe 308. Come up, test, get the rejection, and then move through here. We do have this channel support. You can see on the daily chart, we've been in that channel for a while. Does fit a little bit better here on the 4-hour though. We do come down and test, that would be around 303, maybe 302.50 in that area, test support, and then we do have to look to see what happens there. If this channel does break down, there's a lot of downside potential just because of this huge move that we had. You'd have to look to about 296.50 back at this previous high here. That would really be where I would be looking. And then there's support levels all the way down here as well. Then you have the previous high, 3 drives to a high pattern that we had in the 295 area. So a lot of things pointing to that 295, 296 zone if we do see this structure break down. Moving over to the Russell and the Dow, similar thesis, gap down, filled the gap, move lower. Momentum is bearish, well below the 50 line on RSI. Overall, still holding this previous day's lows, and we are at that support level that we've looked at multiple times. That was the high on 17 January as well as 27 January. We did retest that after breaking on 1 February, and then multiple interactions here over the past several months. So very strong trend line, definitely interesting. Haven't quite gotten down to that level yet. We are kind of at a double bottom type pattern here. It's certainly possible that we push higher. Like we said on the SPY and the NASDAQ, maybe we come up, test 195. That would probably be a little extended, maybe 194.50, 194 in that zone, and then we come down. But like I said, this momentum here is starting to take hold to the downside. If we don't see a solid bottom come in here pretty soon, you'd have to expect that 189 is going to happen, and then you'd be looking at 188. Moving over to the Dow, up quite a bit here after hours. That's probably due to Disney. However, the daily price action was pretty bearish, so did move down, did basically test those highs and then sold off. Did throw a lot of wicks at the 339.50 level and then find a little bit of a bounce. Now we're holding at 340. Pretty flat overall on the day, but you can see momentum here is slightly bearish on the hourly chart. Moving over to Apple and Tesla. Similar thesis on Apple, basically sold off. We're at the 21 EMA for support on the 4-hour chart. Probably going to come up, retest the 9 EMA sitting at 152.94, so about 50 cents higher. Test that tomorrow and then get the rollover. Probably come down and test the 55 EMA on the 4-hour chart. Probably not all in one day, but it does seem like we're going to be moving lower here. You can see we have a trend line at 148.75. Definitely could get into that zone and look to see what happens. If we do break this midpoint here between this high and the lower high, that's definitely going to be bearish. So even if we do come into this level and find a little bit of support, I would expect to find resistance back at this level if we do rally into it and then get the breakdown after that. Moving over to Tesla, not a lot to say here. Continues to rally aggressively, did get through that 200 level. Grinding up at this point. We're coming into the lows back from 20 October at that 205 level. Momentum was bearish today, but the stock price continues to go higher. This is one of those times where the MACD does not really help you, and you do have to keep an eye on moves like this. If you look over to the daily chart here, you can see momentum ticking down as well. Very tough to predict at this point. You do have the 144 EMA as well as the 200 SMA sitting up at 227 for the SMA and 218.81 for the EMA. That would be a lot of upward price action from here, but you can see that previous low that we're coming into, just barely taking out that previous high. So we're right in that zone for rejection potentially, but Tesla continues to grind up bullishly. Moving over to Google and Meta. Just wanted to talk about Google here because this is a clear double top at this point at that 108 level. Came down, made a low, came up, retested and failed, took out that previous low. So now we have a lower low. This does look like we're breaking down. We're at that previous support here. If this does go lower here, you would be looking for 94.50. And this is clearly what was dragging down the markets here today. 7% move is pretty dramatic. See what that looks like top to bottom, a little bit more, 8.25 or so. Definitely very bearish, definitely below the 55 EMA on the 4-hour chart. Definitely not looking good. Moving over to Meta, I did want to show this because we've been going sideways and then we did start to break down here similarly. Does look like we're going to get the cross on the 9 and 21 EMAs on the 4-hour chart. Momentum here on the MACD is already showing bearish price action and the RSI is stepping down quite a bit as well. Could certainly retrace a lot of this move. If you jump up to the daily chart, it does look like a huge gap up because it is from earnings. So leaving a huge gap here, lots of room to fall. If we do fill that gap, that would be a huge move all the way down to 153. I don't necessarily think that that's going to happen, but we could certainly get down to 170 without really a lot of trouble. That would also correlate with the previous high that we had here right at that 170 level. So you had a little bit of a higher high. Next high is at 170. Perfect correlation right there with the 9 EMA on the daily chart. And you can see daily momentum stepping down quite a bit here as well. Moving over to consumer staples and discretionary. Not a lot to say here. Discretionary went fairly sideways, a little bit bearish, still sitting on that 21 EMA from the 4-hour chart that we talked about yesterday. Tested that level and bounced. Testing that level once again, slight bounce. But if that 9 EMA comes down a little bit more and it starts to push us through the 21 and we get the cross, that's going to look very bearish. Similarly, on consumer staples, this does look even more bearish here. You can see all the EMAs in line. Definitely looks like we're going to sell off. And like we talked about before, not a ton of support, something down here at $71. Could move all the way down to $69.20. Do have a trend line sitting at $70.30, so a couple of dollars of downward price action. We do take out this level at $72. Definitely could be in a little bit of a free fall situation there. Anytime these EMAs get in line, you do have to be pretty cautious that we could have a little bit of a waterfall sell-off. The fact that both of these are moving down at the same time kind of indicates that we might be in a little bit of a bigger sell-off to me. You're not seeing a rotation from consumer discretionary over to staples. You're seeing a sell-off in both of them, which is generally not good for the overall markets. Moving over to transports, this does look like consolidation at this point, potentially distribution and looking for that breakout to the lows. We do have that gap down here at 237.90. Come down, fill that gap, turn this into a bearish trend on the 4-hour chart, come down and test the 9 EMA on the daily chart. You have to keep in mind that these longer term trends on the daily chart are still bullish, but these shorter term trends like the 4-hour are starting to look quite a bit more bearish than they have recently. Moving over to semiconductors on the 4-hour and the daily chart. Just to give a little bit of perspective here, on the 4-hour, it looks like we've broken through this trend line. On the daily chart, we're still sitting right on top of it here. So watching to see what happens. Just kind of pick which trend line you like more. It does seem like you could even move this down just slightly on the daily chart, which does put you in line with that previous test. Again, indicating that you're probably a little bit above this trend line. Similarly here on the 4-hour chart, slightly above the trend line. Overall, does look weak, does look like a double top. Momentum ticking down, RSI ticking down, does look like a topping process. Potentially looking for that retest of the 21 EMA on the daily chart, sitting down at 335.80. We do have that big support level at 229 we've been talking about. But of course, we still have to get through the trend line, which is sitting just $2 below where we are right now. That also would get us below the daily 9 EMA sitting at 244.98, so 245 basically. We do come down and test support and the EMA and we break. Then you have to be looking at that 238.40 level, maybe 237 back in that zone. That's the previous high that we had here. There's also a couple of gaps that we left back here down at 237 to 238.30, so gaps that could be filled if we come down and test the 55 EMA on the 4-hour chart. Overall, not a lot to add. Everything looks bearish, but we are still sitting just on that support level. Does seem like we're consolidating and waiting for that breakdown here. Moving over to stocks above their 20 and 200 EMAs, you can see stocks above the 20 is moving down and momentum is down here now. So this is starting to roll over, at least in the short term. Overall, this is still a bull trend on the 200-day moving average, so you do have to keep that in mind. Does seem like we're going to get a short-term retrace, though. This is starting to roll over pretty significantly, especially after the bigger update that we had yesterday. Definitely rolling over. Momentum is bearish here. Does seem like this rally has topped out, in my opinion. Moving over to bonds on the 2-year and the 10-year on the 4-hour. 2-year continuing to stay below that 450 level. Does look like we're consolidating here. Could get a breakout to either side. Definitely watching this one. 10-year, a little bit more interesting. Did break out, did come in, retest support and rally. Could not make a new high, got rejected at the previous high, and then broke back below the trend line. And this does look bearish now, so that's definitely interesting. Does not fit with the thesis of an overall move down. Usually you want to see yields going higher, but that's not what we're getting here, so do keep that in mind. If you are trying to short the market and you think we're going to go down, yields are not really participating in that move quite yet. Moving over to put-call ratio on the 1-hour just for a moment, you can see this trend line that we've been watching. This ratio has been moving down over time. But we are starting to hold above that level at slightly higher levels than we've seen here recently. We were getting below this previous trend, but we're back above it here, and it does seem like we're starting to pick up a little bit. So we're moving from that kind of oversold area here where we were showing all bullishness, and you can see we're starting to kind of round up here. And that's what you want to see if you expect the markets to move down. So people are starting to pick up on the idea that the markets could move lower. And then once we see some bigger spikes up into this 2 range, kind of like we saw the last 2 times, that's probably indicating that the overall move to the downside is complete. So it does seem like we're starting to see the early stages of a rotation down. Moving over to the dollar just for a moment, we talked about the rejection at the 55-day moving average, came down, found some support at that 103.15 level. You can see on the 4-hour chart that was also coinciding with the 200 SMA. Did bounce from there. Now we're looking to see whether this is going to form a lower high at resistance or if this is going to break out once again and make some higher highs. If you're trading to the bear side, you want this to break out, but this is certainly indicating potentially that we could find resistance here and sell off, which would give markets a little bit of room to the upside, at least in the short term. Moving over to J&K, not a lot of updates here. Did move down slightly today. Still is holding that 93 level. Been watching $93 for a long time. We did test it once again here today and bounced slightly. Did find a little bit of rejection up here now. Not really at a solid level per se, but we did move down after we got the bounce from 93. Once we get this break of 93, that should be a pretty good indicator that we're moving lower overall. You can see momentum on both charts is to the downside now. Definitely something to watch going forward, but still have not broken that 93 level quite yet, and we can't throw everything to the bear side yet. Moving over to TLT, as you would expect, it did bounce a little bit here today with the 10-year yield moving down. TLT moved a little higher. They're not perfectly correlated because this is 20-plus year treasuries, but they generally move counter to each other. So you can see here, made a lower low on the hourly chart, but did bounce, getting above the day close yesterday. So overall, bullish day, continuing to stay above the 55 EMA. It's worth noting that we did get the cross on the 9 and 21 EMAs here on the daily chart. So even if you do get a bounce, you do have the 144 EMA, which has acted as resistance for the 2 previous days. You're now getting that cross, indicating that this is potentially going to roll over here. Of course, you can always get a short-term cross like we did here, where you get a short-term cross, does dip below, you do eventually find some support and then get a move higher. Certainly a possibility here. But even regardless, usually when you get a little bit of a cross there, that does indicate more downward price action, at least in the short term. It's also worth noting we did not get above the 50 RSI on the daily charts. We did here on the hourly chart, so if you see this roll over through the 50, that could be an indication of more bearish price action to come. That would probably be a rejection here at the current level, which is 48.45 on the daily chart. So rejection at the 50 level, roll through the 50 level on the hourly, indicating more bearishness and higher yields, which should take the markets down. Also, before we finish, you can see the 55, 144, and 200 SMAs all getting in line here on the hourly chart. Those all crossed here today, again, indicating more potential bearishness to come. Moving over to the VIX, this is certainly interesting here. You can see we broke out. It does look like we came back and retested that level. And it does seem like there's potential that we bounce from here and go higher. That would obviously be very bearish for stocks. Does not look as clean here on the daily chart. It is a bit of a breakout. You would want this to continue. You definitely want this to get the straight continuation, especially after this slight move down that we had on the last 4-hour candle of the day. If this does break back below here, and then you would be looking for support at the 1860 level, maybe 1850, double bottom at that point, and then look for a higher move. Could also come back in and retest the support line and get the continuation. That's probably preferred if it is going to continue. It's a little bit tougher to trade if it comes back down and finds support at this level. Then you got to look for a bigger move higher through the resistance and through the previous highs. That would be less clean, but it's certainly possible. Moving over to my accounts, you can see I squeaked out a small profit here. Most of my losses were in the IRA where I had that naked put. I decided not to get assigned on those shares. I don't know how I feel about that. I think we might get a short-term bounce into the early session before we sell off. I am overall bearish into tomorrow's session. I'll probably look to take a covered put position or maybe just sell some naked calls tomorrow. Right now, I do have no positions. I just have these 2 covered calls, which are going to get assigned on the NASDAQ. I did roll down to 304, which was perfect. That allowed me to get assigned. I did want to get out of these shares. Also sold some calls in the midday, which worked out pretty profitably. And that's really where I generated most of my gains. Managed to squeak out a small profit on a day where the NASDAQ was down almost 2% just by playing a little bit of defense. So that is good to see. Managed to keep my profits from yesterday and not take a loss here today. Like I said, short-term bullish, probably get a small retrace, but overall, everything is starting to look more and more bearish every day. Let me know down in the comments section if there's any charts you would like me to go over or any of your thoughts on the market going forward. What do you think of Google AI? Are they going to be able to keep up with all the hype around ChatGPT? And what is AI going to do to the world around us? Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.